All right, and welcome, friends, to our very special insider coaching call for the month of April 2017. Very grateful to have everybody here today. Now, you should notice in the handouts section of your GoToWebinar software there, you should have a PDF that you can download. When you download the PDF, it should look something like what you see on the screen now. Here is an example of that PDF. You should have this in your handout section. Now, we're going to get into this topic today because Europe really has been on a run since the beginning of the year, and we're going to get into Europe and specifically into 7 different country ETFs and how you can play them, a little bit about them, and just provide you with some basic overview of some of the things that are happening in Europe and how they could be something that you could take advantage of this year. Now, first of all, we begin with a chart of the S&P 500 breaking out, much of it having to do with the French elections, which we'll talk about in just a moment. You see that the S&P 500 is now moving back into an area where we had seen it before. So we're now back at that 2400 area of resistance. We're back in this red zone here. Breaking out above 2400 will be a very bullish moment. We're also at the very tip top of this uptrend that you can see here. We're threatening it right here, so we'll see if we can cross over and move into new, fresh territory for the S&P 500. You can see we're well off of the 200-day moving average, which is nice and increasing, looking very, very confident here on the charts. Taking a look at another important U.S. chart is the U.S. dollar. Recently, we did run into pretty big resistance. You know, this is a chart I've been using for many years. We've made good money with this chart over the years for trading gold and silver, also using it for equities, international equities, commodities, and you really want to pay close attention to this 100 level here. And we did retake it as of late. Now we are failing at this area, partially due to the strength of the euro, partially due to the fact that President Donald Trump has talked down the dollar. So anyway, the dollar is weakening right now. You can see that it is pulling back. It's down below this 100 level, which is a very key area, as already stated. We'll continue to watch the dollar here. Now let's go ahead and move into the French election. I want to talk about what happened in France because it has a direct bearing upon what's happening in European stocks. I mean, it couldn't be any more direct what's happened here. So what you're looking at here is basically the results of the French election. Emmanuel Macron, who is the leader now in the polls, was the centrist candidate in France. He was not really someone who most people were looking at ahead of the election, although he was gaining strength toward the end of the election cycle. In fact, many people were concerned not about Macron, but about a potential win for Marine Le Pen, who you've probably heard a lot about in the news. She's made a lot of U.S. news as the populist candidate in France. And then you also have the far left candidate as well, that the actual fear was that these two candidates were going to emerge as the winners. And why this was a fear among investors is because both of these candidates, the National Front Party and the Indomitable France Party, both wanted to get rid of the European Union. They were both anti-Euro, right? They were both anti-Eurozone. They want to get France out of the European Union. And so, if we were only left with these two choices, we would be facing a very different stock market right now. In fact, we would probably have Europe going down. The reason why Europe went up is not because Marine Le Pen was able to win, but because Macron, who is a centrist and he is pro-EU and he's also pro-business, he looks and appears to be the leader, and he really emerged as pretty much the heir apparent for the presidency in the May 7th final election. So if you're not familiar with the French elections, it's no big deal. They have 2 different voting times. They have a first round and a second round. Okay, so the first round basically decides who's going to be in the second round. And so you had all of these people were voted for in the recent election last week, And then, of course, you had what we have now, and that is the two candidates, Macron and Le Pen, emerged, and now they face off on May 7th. Le Pen has really become isolated now that the victory has been won by Macron, as much of France is now rallying. In fact, nearly all of the other political candidates have rallied around Macron. They see him as the status quo candidate. They see him as pro-business. They see him as pro-EU. Macron supports the idea of a single European commissioner in Brussels. He is very pro-European Union. He is the kind of status quo politician that investors can like, right? Le Pen, a little different. Le Pen, of course, you can see here that she came in second, and so she goes on to face Macron on May 7th, but all of the other parties have pretty much thrown their weight and support behind Macron. Now, this could backfire. So just because Macron is the favorite to win on May 7th does not mean that he has to, because there's all kinds of things that could erupt between now and then. I mean, if we've seen anything in recent election cycles, it is that propaganda wins out, right? And propaganda, if you haven't really heard us teach on propaganda, we did a very important teaching on propaganda just a couple of months ago on this insider call. I encourage you to go back and watch that if you haven't seen it in the archives at ftmdaily.com/call. You can go back and watch our take on propaganda. You know, so for the next couple of weeks, as we move into this May 7th date, it is very possible that we're going to see some, you know, major news that is trying to make Macron, trying to defeat him, whether it could be some WikiLeaks that drop, whether it's some other form of organized propaganda, who knows. It could even be another terror attack. So Le Pen really struck a chord within the rural communities of France, whereas Macron really had heavy support within the metropolitan cities, also especially out on the west area of the country, definitely southwest area. He was very strong all across Paris. He had a very good, strong showing. So, you know, he really, again, is the establishment candidate. Le Pen will try to use this against him, of course, just as he's using things against her. Now, let's take a look at a couple of things here. First, let's take a look at this chart. And notice this is from the very beginning of 2017. This is the S&P 500 in the blue. In the blue here, this is the S&P. And this right here is the Euro Stoxx 50. This is one of many different indexes or indices that you can follow across Europe. The Euro Stoxx 50 composed of 50 of the largest, most liquid, well-known, prestigious, publicly traded companies in Europe. And it is a really good proxy, I think, for Europe. Not as good as the S&P is for the United States. It's really kind of more like the Dow 30 here in the United States, right, where you have just kind of this small concentration of major companies that really kind of tell you what's happening in the U.S. economy. But the S&P 500 is a much better barometer of a broad economic or broad state of the stock market here in the United States. But you can see the Euro Stoxx 50 really breaking out. Now notice that things were not so hot for Europe in February, and this was because there were concerns that the Netherlands election, which was held in March, was going to also have another populist wave. Remember Geert Wilders. Well, we had a nice run in March, and then things slowed down in April again here. As you'll see, this is another electoral kind of issue here as we moved into the French election. So here you kind of have the Dutch election here, so you can clearly see how it impacted the market. So there's the Dutch election. And then we have the French election right here. Here's France. We got a few more coming up this year too, so you need to be aware. Germany has one in September. It's an important parliamentary election. And then, but we shouldn't have any kind of issues there. It's going to be Merkel versus Martin Schulz. He's very pro-EU. I mean, there's no chance between those two that you would have any kind of populist uprising. So, I mean, both of them are strong pro-EU. So no concerns there. We do have a later election with possibly with Italy. We'll talk about that in a minute. But you can see here that the overall market really pulled back as investors got concerned again. They said, now Le Pen could possibly really have a big showing here, and especially with the the terror attack on the eve of the election, there were concerns that she would really have a much stronger showing. But when the results came in, you can see what this market did. Much more important than the Dutch election. You can see that the stocks soared, and this is the Euro Stoxx 50. I mean, they literally almost just, I mean, it was just a massive run. So the overall return for the year went from about just under 7% all the way up to almost 14% in just a matter of a few sessions. So this was big rally, a relief rally that Le Pen looks set to lose. So anyway, the Euro Stoxx 50 versus the S&P 500, it's been on a tear. The Euro Stoxx 50, European stocks, really breaking out. So here is the Euro Stoxx 50 ETF. This is a 15-year chart, and this will really show you what's happening here. I mean, very obvious that a breakout is occurring right here. European stocks, for the most part, have been a pretty big loser over the years. I mean, if you just put all your money in European stocks and didn't have any exposure to Asia, didn't have any exposure to the United States, I mean, it just hasn't been that great, to be honest, for the last several years. Now, that's not so true if you go back to, say, the first part of the 21st century, you know, from 2003 all the way up to the bubble. I mean, Europe was rocking and rolling just like many other countries or other areas. But it was kind of a self-fulfilling prophecy because the media was relentless in constantly saying, is the euro going to fall apart? Is the euro going to fall apart this week? Is the euro going to fall apart next week? And, of course, you had commentators all throughout this time screaming about how the euro was going to be disintegrated, it was going to go away, people hate the euro, everybody's going to leave. And so, you know, it's a very hated market. And because of that, the stocks just really didn't do much. I mean, they just kind of went sideways for a while, you know, as you can see from this chart. But there's been a progressive improvement and quite a market improvement since the beginning of the year. This breakout here looks a lot like what we saw in the middle of 2012, right in the middle of 2012 in the summer, we have this nice breakout in Europe that you see right here. I believe that we're probably on the cusp here. Now, you know, that's just strictly an opinion. I don't prognosticate and tell you where I think things are going. Who knows? Who knows what will happen tomorrow, right? A black swan could occur tomorrow, a black swan event. So nobody knows where things are going really. But just if you take all things being equal, and if you look at the basic trends, we see a breakout here, especially when you consider this trend line that has been drawn, and you see that the price is now breaking above that. That's a very bullish moment here. So overall, Euro stocks look very compelling. In this very first chart, you can see that there is quite a rally here. This is a year-to-date chart that you can look at in your PDF that is sent out, also there in the handout section here on GoToWebinar. And you can see here this very top one, this blue line, this is Poland. Poland has really run hard since the beginning of the year. It's been one of our top performing global markets that we track. It's up over 30% year to date. The second highest returning Euro country in this list here is Spain. Spain also, we called that one pretty early. We saw the breakout coming, and we were able to really enjoy that rally. That one's up over 20%. But you know, really, when you look at all of these numbers, 20%, 16%, 13%, 12%, 10%. I mean, the S&P 500 is up 6%, right? So if you put that in context, that's quite a rally. I mean, Poland's up 30%, the U.S. is up 6%, right? I think it's important not to ignore Europe here. So just having some exposure, you know, maybe just to a good European ETF, or maybe even picking a country that you have an affinity for. Maybe you like Poland, or maybe you like Spain. Maybe you've been to Spain, or maybe you've been to Italy, and You know, maybe you like the idea of investing in those Italian companies in addition to investing in U.S. companies. You know, these are the kind of stocks and kind of areas you can look for. So these are the ETFs that we track, and we've placed them into the report. Let's come down here and show you this. This little list here is the list of ETFs that we've placed into today's report. All of these we track in our global ETF report, which is on our website. You can find from your dashboard. And we also list them in our weekend briefing every weekend, that PDF that comes out to you by email. So you can always track how these ETFs are doing. You can see we have Germany, France, Italy, Spain, Netherlands, Greece, and Poland featured in this report. The number of stock holdings that are in each of these ETFs is kind of an important number. The more holdings that are in an ETF, the broader exposure, the less single stock risk you have, right? So 76 stocks, if one of them drops, is going to give you much better protection than maybe one that has 23 stocks where one of them drops, right? You're going to feel the pain a little more, or you're going to feel the uptrend a little more, right, with less holdings. The equity universe coverage, what I mean by this is so in other words, if you invest in Germany, you know, how much of German stocks are you really exposed to? And the way that the Ishares Germany ETF is set up, it's based upon the MSCI Germany Index, and the MSCI Germany Index is designed to give about 85% exposure to, you know, to Germany. So, you know, 85% of the equities in the German universe are going to be pretty much covered in this ticker. So you can get pretty broad exposure to Germany. If you think Germany is going to go up, you could buy EWG and pretty much get exposure to the whole country. What we like about these ETFs as well is that while there are other ETFs that you can purchase to buy Germany or France or any of these, some of them have two, not all of them. Some of them only have one, like Greece. I think Greece is the only Greek ETF, this GREK. I think that's the only Greek ETF out there. Maybe there's a new one now, I don't know, but I don't think so. But the reason why we like these particular is that they have volume. They have a good track record. They've been around for a while. They have lots of volume, so you can get in and out of them to trade them or to invest in them. So that's helpful. Okay, then let me just kind of go over one or two of these pages with you. Let's go down to let's go down to France, since we've been talking about France quite a bit.